Travelocity says the average airfare this Labor Day weekend fell 16% compared to last year. Does that mean more bad news for airlines, though? Not necessarily, according to one analyst. Let's go now to Bloomberg's Adam Johnson once again for the explanation. Adam?
Yeah, Scarlett, pretty ironic, isn't it? Fares dropping, and yet one analyst is saying, buy the airlines. Morgan Stanley's Bill Green says exactly that. He says that trends are turning. Take a look at good old revenue per average seat mile, or RASM, as analysts like to say. It grew 5 to 10% each year through 2007. They got as low as negative 14% in March. And at this point, it's about negative 3.2. You see how that's turning? Well, there are two reasons for that, says Bill Green. Number one, capacity cuts. They currently this year are down about 6.8%. In other words, airlines have taken 6.8% capacity out of what they were offering. And, of course, the reason they're doing that is trying to fill the airplanes. In other words, make them work harder. You have to spend less on jet fuel, and, of course, you might even be able to furlough some people, and that's why the airlines are effectively doing that, and they're trying to lower their costs and make more money at the same time. That's good for their earnings, in theory, says Bill Green. And, of course, number two, and this is the surprise, online bookings are up. Look at Expedia, EXPE. It's up 178% this year. Guess what? They just recently said on their second quarter conference call that bookings are up 18%. Now, we spoke to Blake Tankersley over at Baycrest Partners. He sees that as a leading indicator. In other words, if the online travel agents are seeing greater bookings, says Blake Tankersley, then how can you possibly have the airlines trading down 28% year to date? Kind of interesting, Scarlett.
Absolutely. And don't forget the added revenue from all those fees that they've tacked on now.
Yeah, that's right.
What are the arguments against the airlines, though?
Well, I mean, take your pick. Besides fuel prices and a difficult economy. But here's something pretty interesting. Again, this sort of gets into the nuts and bolts of the way the airline industry works. Look at seasonality, Scarlett. You see there's a huge peak in the middle of the summer. All right, load factor, that's how many seats effectively are full, running about 80% in the middle of the summer. And see how that drops off? It gets as low as 73, 74% coming into September, October. In other words, a tough time coming into the fall for airlines. So that's really the question. Can they get through that tough time, Scarlett?
Okay, thanks so much, Adam Johnson, over at the Markets Desk.